Let's see what African central bankers should be doing now to hedge against most of these global risks. We're also seeing that, in the currency side of things. Well, joining us to discuss now, we have Julian Karagosian, is a former special advisor at Canadian Ministry of Finance and also a visiting lecturer at Department of Economics at McGill University. It's great to have you on the show, sir.
Thank you for having me, Laddie.
So, definitely a tough time when you look at what's playing out in the U.S. with, the relationship between President Donald Trump and the U.S. Fed Chair Jerome Powell. In your experience so far, have you seen this type of relationship before with the central bank and the executive, and what does it normally lead to?
Well, this in terms of the last 45 years is rather unprecedented. Typically, the White House and the government of the day have been pretty hands-off. The only example is the appointment of Paul Volcker in the late 1970s to bring down inflation. But there you had political alignment with monetary policy. What we're seeing today, the tension is that President Trump has indicated directly and indirectly he'd like to see lower rates, which is a big break from convention. But with the recent court decision that upholds the independence of the Federal Reserve, I think that's one victory for independent central banking, if that's the objective. But I think also at a even bigger political level, there's one thing that gives President Trump pause to think before he acts, and that is the stock market. And the U.S. equity markets and global equity markets would not like it at all. There would be consequences if President Trump tried to directly interfere and even remove Chairman Powell, which he does have the right to do, and put in place a banker that would be more amenable to the political cycle. Markets would not like that. And again, one thing Donald Trump has backed away from is upsetting markets too deeply. We saw that in April, and he backed away towards a deal with China in order to restore market stability.
All right, but with what we're seeing, playing out there, definitely bringing it down to Africa at this point, and we're still seeing central bankers here. Some African countries are winning the war against inflation and keeping their currencies stable, but we see some countries actually struggling at this time. What do you think African central bankers should be doing at this time to learn from what we're seeing playing out there in the global stage to actually keep things tight here in Africa?
Well, I think it underscores the importance what's playing out globally in the U.S. and elsewhere. I think it underscores for the entire world the importance of having, we need central bankers that are accountable to the people, absolutely, but we also need central bankers who in the day-to-day management of the money supply and interest rates with the objective of creating price stability, it's absolutely critical that they have independence in achieving these objectives. Ultimately, they do have to be accountable to the population. And in a democracy, that means to democratically elected officials, to the government generally. But in their day-to-day management, they need that type of independence. And so that's one of the big, you could say, lessons or, lessons that is coming out of what's playing out in the United States right now.
Right, and we've seen instances, in some countries in Africa where, the central bank, kind of acts too powerful and, takes on some kind of decisions that actually work against the country. What's to be done in that kind of situation?
I think, and we've seen examples of this in the North and in the global South, where central bankers, we've seen instances where central bankers right across the world, in some cases, have taken too harsh a line on controlling inflation, some even believing that zero inflation is the right number, which is extremely rigid. You put an economy in a straitjacket and you squeeze growth and investment out of that economy. So economies do need some inflation because quality typically rises over time, and so the inherent price of goods and services needs some flexibility to grow. And so again, it's really a balancing act between not letting the so-called the toothpaste out of the tube, letting runaway inflation, but also avoiding deflation and or stagflation.
And going forward, do you see some kind of collaboration between the global central bankers at this point? Do you think they're going to come together to try and combat global inflation and global currency issues? Is that what you're seeing?
Right now, there's so much geopolitical divergence globally, and I'm not talking just about between the US and China and the West more generally and China, but also within the West. The Trump administration, a lot of their trade policies and trade policy uncertainties have been aimed actually at, in quotation marks, allies and partner countries. And this doesn't bode well for monetary policy cooperation. We've seen Christine Lagarde and other European central bankers saying publicly that this is the moment where the euro can gain globally as an international currency. So there seems to be more competition on the horizon rather than more cooperation.
And we also say we've heard some quarters, talk about, stable coins and Bitcoin at some point trying to solve, some of these currency problems in the world. Do you see that as a possibility?
At this point, I don't, just because if countries like the United States, one thing that ties the United States and China and Europe and the rest of the world together, or much of the rest of the world, is that they want to maintain their national currencies as the medium of exchange and store of values in their countries and globally. And I just don't see them in the foreseeable future giving away any kind of latitude to stable coins and cryptocurrencies.
All right, thank you so much. There, so much to expect. At this point, we're done with the first half of 2025. Now, on to the second half. At this point, we'll see how things go. Thank you so much for coming on. Julian Carragwison is a former special advisor, Canadian Ministry of Finance, and a visiting lecturer, Department of Economics, McGill University. Thank you for coming on today.
Thank you, Matthew. Thank you for having me.